Back again, guys. Joe Baker with Trade Pilot. Want to go over one of our indicators called the Trade Pilot Pro Sync Indicator. It's actually an index as well as an indicator. Um, Reason why it's an index, if you notice, what I used to do many years ago is I would actually stack the indexes one on top of another. So I would make sure that each one of them was in a downtrend or an uptrend before I got in. Um, Reason being is the futures markets can be obviously can have a lot of noise in them. They represent the underlying uh, index it's trading. So obviously the S&P obviously has the 500 largest cap stocks in it. The Dow is the Dow Jones Industrials, so forth and so on. Nasdaq, a lot of tech stocks, and the Russell, mid cap and so forth and so on. So what I'm trying to say is that they should all be, in order to get a move, a proper move in this market, they should all be in a downtrend or all be in an uptrend. What can happen is you can get head faked because of the noise in these markets quite a bit, and what can happen is the Dow can pop up, say 12 ticks, and the S&P may bounce one or two ticks. You know what I mean? So they're not always in correlation. Typically, it's in a perfect world, it's 10 S&P points for every 10 Dow points for every S&P point, but we're not always in a perfect world in trading, as we all know. So what we try to do is eliminate the noise. So on the open, we obviously use our yen indicator, um, which is the MACD looking thing, and you can see that turned red. Okay, it gave a sell signal 2 minutes before the opening bell. Okay, it said this market was coming down. Now, if you look at the sync indicator, we had some red, some orange, and a couple of greens, which showed some indecision on the market. So what was happening is they were weakening, and that was giving us a heads up that this market is weak and it's rolling over. Um, this is what you got the yellow line, which is the 200, the magenta, which is a 34. We actually put a moving average on this actually made index, which is an index of the indexes. This is why we're always catching some really good trends, because we want to make sure that they're all in agreement. In other words, they're all falling or they're all going up at the same time. I don't want the S&P running up. I don't want the Dow going up in that way. That doesn't represent a good trade for me. I don't want to be in that trade. Let that bus pass me by. And what this does is it eliminates any of that from happening. So as you see, we got a sell signal, roughly a warning 10 minutes before the open, 2 minutes before the open. Our yen indicator kicked off, and we knew we were in a downtrend. Now, if you look at this lower index, you can see how our paint bar study actually turned green. Now, this was the Russell, and that one, as you know, can be a little bit of a pain to trade sometimes because it does have a mind of its own. And you can see how at the same time as that was rising, the S&P and the Dow and the Nasdaq were falling. Okay, now unless you stack all these markets up, you're never going to know that. But you can see how the Russell actually, it gained about 3 or 4 points here on this run up from the low to the high, all the while in a downtrend. So if you were trading the Russell, this is why the sync, is kind of invaluable, because it said stay in the trade, and as you see, the Russell just gave it up at 10 o'clock, and caught up with the other two, the other three indexes. So this is one of the things that we use. We are going to be using this in a trading room. We're going to be calling out live trades throughout the day on the indexes, and you will be able to see this through the web conferencing software, work in real time. And I think you'd be quite amazed at how well it is at catching solid trends in the market. It's like anything else, guys. If you're stuck in the mud and you're up to your ears in it, do you want one truck pulling you out, or do you want all 4 trucks pulling you out? And that's the thing. You're not gonna, you can move one market one way or the other, but you're not gonna move 4. And that's why we created this indicator, and that's why we came up with it. So it's a wonderful, wonderful indicator. We've been using it for quite some time now with amazing success. And what we've done recently is we've actually done a inverse market sync indicator, which is quite amazing because there's a lot of indexes that move inverse to the market. So if the stock market itself is coming down, these other indexes will be going up. And so what we've done is we've made kind of an index based on that. So basically they confirm each other so that we know where we're in a solid trend. And we'll stay in this trade until our other indicators tell us. As you know, we use pivot points. We use our levels. We know, where the traders are through another couple of our indicators. We basically can find out, where the traders are and where they're going to liquidate, why they're liquidating, or why they're buying to cover. So I'll be going over all those nightly and try to get you all the videos on all these. And again, if you want to go to the blog, which is, you have to go to the left hand side of the page on the YouTube site and hit the blog. There's a little part where you can sign up for our email newsletter, and I'll be sending that invitations out to the chat room, and I'll be also doing longer videos on how to use these, and I'll be videotaping them live and playing them out. Obviously, YouTube only gives me 10 minutes, so it's kind of hard to do that. But I'd really like you guys to see these because we've worked on them for quite a number of years, and it's what we all use on a day-to-day basis. We put our own money up. We're eating our own cooking. These are what we use every day, day to day, and they really don't fail us. So, hey guys, I will talk to you soon. Take care, and again, tomorrow's Fed Day, so please be careful and take care.